Hello, everyone, and thank you for joining us today. I am Brian Simmons, a tax shareholder at Kirkring Barbario. We are here today to take a closer look at the new charitable deduction tax provisions introduced under the recently enacted One Big Beautiful Bill Act. This landmark legislation brings several significant changes that will impact both individual donors and nonprofit organizations alike. To help us navigate these updates, we're fortunate to have two of our talented KB tax experts with us today, Matthew Fuller and Mark Murphy. They'll be walking us through the key provisions, their implications, and what to watch for in the months ahead. Please understand that this bill is evolving, and we are expecting guidance in the near future that could significantly impact your specific situation. With that, take it away, Mark and Matt.
Hey there, and welcome to Kirkring Barbario's Tax Talk with Mark and Matt. I'm Mark Murphy. I'm a tax supervisor here at Kirkring Barbario. And today we're talking about current changes to charitable contributions and a new tax credit that could help you support K through 12 education. So stick around and learn how to lower your federal tax bill while helping charities and further education. And here's Matt to talk about what's changing with charitable contributions.
Thanks, Mark. My name is Matt Fuller. I'm a tax senior here at Kirkland Barbario. If you've donated to charities in the past, you're likely familiar with the 60% limit on charitable contributions. That's 60% of your AGI. That number was set to be reduced down to 50%, but the bill is set to retain that number at the current level of 60%, and you can continue to give contributions and get the full benefit for it. If you give more than the limit, you can still carry that extra forward for 5 years, and this applies to cash contributions made directly to charities, so no private foundation or donor advised funds. Next, Mark's going to talk about some of the benefits that non-itemizers can take advantage of.
Yes, here's a big one for people who take the standard deduction, which is most of us. So starting in 2026, if you don't itemize your deductions, you can still claim a deduction of up to $1,000 or $2,000 if you file jointly for cash contributions to qualified charities. So again, contributions to donor advised funds and private foundations will not qualify for this new opportunity as they are not considered qualified charities. And this is not an above the line deduction like the temporary one we saw back in 2020. Instead, it reduces your taxable income after AGI is calculated. It's also limited by a 0.5% of AGI floor. But still, it's a great way to support causes you care about and get a little tax break, even if you don't itemize. And Matt will explain a little bit more about this 0.5% floor.
Thanks, Mark. If you do not itemize, there's a new 0.5% floor for charitable deductions. You may be familiar with this from your medical expenses on your Schedule A. They're limited to 10% of your AGI. So that means the first
0.5% of your AGI worth of your charitable contributions.
You're not going to be able to deduct those. This starts in 2026, and let's suppose that you had $100,000 in adjusted gross income that year. The first $500 is not going to be eligible for deduction. So any amount over that will be. The floor does not apply to old donations that you're carrying forward before 2026, but it applies to anything going forward. Now back to Mark to talk about some more updates.
So, of course, the big question on everyone's mind is when does all this take effect? So these changes all start for tax years beginning after December 31st, 2025. So you'll see them show up on your 2026 Form 1040 personal tax return, which you'll be filing in 2027. And before we wrap up here, I want to touch on some changes to overall itemized tax deductions that will be starting as well. Previously, there was a rule called the Pease limitation that reduced how much high income earners could benefit from itemized tax deductions, like deductions for state and local taxes and so forth. This rule was set to return in 2026. It would have applied to individuals making over certain income levels, for example, $408,000 for married couples. But now under the new law, the One Big Beautiful Bill Act, that old rule is gone for good. And instead, starting in 2026, a new cap will limit the value of itemized deductions only for people in the highest tax bracket. And these taxpayers will now get a maximum tax benefit of 35 cents for every dollar they deduct instead of 37 cents. So this change mainly affects high income earners and simplifies how deductions work for them. And Matt is going to tell us about the new education credit that's coming in 2027.
Starting in 2027, if you're a U.S. citizen or resident and you donate cash to a special type of scholarship granting organization, you may be eligible for a credit. These are credits for education purposes for K through 12 students, and you may receive up to a $1,700 tax credit. If you and your spouse would like to join forces, you can get double that amount and donate up to $3,400. It's important to clarify that this is for K through 12 education only and does not apply to scholarships for university level, and it only applies to state-approved scholarship organizations. So you might want to clarify that first before making any of these contributions. And we'll go back to Mark to wrap things up.
Thanks, Matt. We've covered a lot here today. So just to recap briefly, you can keep deducting up to 60% of your income for cash donations. Beginning in 2026, non-itemizers can now deduct $1,000 to $2,000 for charitable giving. Remember, you lose 0.5% of your AGI worth of those deductions. And you may qualify for a federal tax credit of up to $1,700 for donations to scholarship granting organizations. Again, this new credit only applies if your state participates. States have to opt in and submit a list of approved organizations by January 1st each year. So stay tuned to see if your state gets on board. And remember that, of course, interpretation of tax law is a fairly complex matter and everyone's tax situation is somewhat unique. So for more details on how these changes apply to your specific situation, be sure to get in touch with your Kirkering Barbario tax planning advisor or with Brian Simmons.